Hi, I'm Chris Taylor, Global Head of Listings at the New York Stock Exchange, and today is Gerdau Day at the NYSE. In 2021, Gerdau completes 120 years of history and more than 20 years of being listed on the New York Stock Exchange. Gerdau is the largest Brazilian steel producer and one of the main suppliers of long steel in the Americas and of specialty steel worldwide. Gerdau has 32 steel production units, 28,000 employees worldwide, 250,000 hectares of forest space, and a presence in 10 countries. The company is also the largest ferrous scrap recycler in Latin America. In this virtual event, investors will hear from the main executives about Gerdau's digital transformation, its financial results and outlook, and how the company views ESG opportunities. Come with us to learn how Gerdau will shape the future. Thank you.
Good afternoon, everyone. Welcome to Gerdau Day. It is my great pleasure to start this meeting, which was created especially for the year Gerdau proudly celebrates 120 years. Before we start our event, I would like to share some important information. As we are still experiencing COVID-19's health crisis, Gerdau Day is being held online, but even so, I'm sure it will be a major opportunity for us to talk about the company's outstanding performance, strategies, and prospects. At the bottom of the Zoom screen, you can choose in which language you want to watch the streaming. Simultaneous translation into Portuguese is available. We will save some time to answer any queries that may arise during the presentations, so feel free to send your questions through the Q&A button that is available at the bottom of the platform. And before we go on, one last important message. Everyone here in the studio, myself included, took the COVID test and we are complying with every required safety protocol. Well, Gerdau's history, as I mentioned, started 120 years ago. A successful journey has led the company to be Brazil's largest steel producer and one of the largest in the world. So to talk about this leading journey in the steel market and to officially open this meeting, I have the honor to introduce the President and CEO at Gerdau, Gustavo Werneck. Welcome, Gustavo.
Good afternoon, everyone. I want to start by welcoming everyone to Gerdau Day 2021. I hope that all of you are well, healthy, and getting through these difficult times as well as possible. I wanted to hold this event in New York City, like we did the last Gerdau Day in 2019, to be able to talk with you all personally, but we are still forced to follow global health protocols to eradicate COVID-19 as soon as possible. So we opted to hold this virtual event in partnership with New York Stock Exchange, so that we can share important information about Gerdau without having to wait for the next opportunity to meet you all in person in the United States. With me today is our CFO, Harley Scardoelli, and our key executives responsible for the United States, Xia Wang, for Brazil, Marcos Faraco, and for Gerdau Next, Juliano Prado. It's always a pleasure for us to talk with you about our performance and to answer any questions you may have during our presentation. Let's start by talking about fiscal year 2021, which holds a special place in our history, and by commenting our special steel operations in Brazil and the United States. Then I will pass the presentation over to Wang, who will talk about our operation in the United States, and to Faraco, who will comment on our long and flat steel operations in Brazil and in South America. Then Juliano will talk about the plans at Gerdau Next, our business development division, and Scardoelli will comment on our financial results. Then I will come back to give details on our strategic focus and the next step in our ESG journey. Lastly, we will have a question and answer section when we will be available to talk with you about any points you want to explore in greater depth. As I noted, 2021 is a very special year for us, since it marks our 120th anniversary. Born in 1901 as a small nail factory, today we are Brazil's largest steel producer and Latin America's largest recycler in ferrous scrap, with operations in 10 countries in the Americas. We commemorated yet another important milestone in our century-long history ready for a new cycle of sustainable growth. Over the past few years, we have reinvented our company. We have become an organization that is even more focused on people, more digital, more innovative, more diverse and inclusive, while continuing to deliver solid financial performance. Looking to the future, we are going to accelerate our progress on two major challenges, which you will see in more detail over today's presentation, which are creating more value for our customers located in our key markets, especially in the Americas, and becoming an even more sustainable company in all aspects. Let's move on to the next slide, which shows our Special Steels business division. In Brazil, despite the impact from the semiconductor shortage on the automotive industry, which resulted in as many as 230,000 vehicles not being produced in January to August, and will continue to adversely affect the light vehicle market over the coming months, demand for special steel has remained firm, especially for heavy vehicles, which is enjoying strong demand in line with the robust performance of the construction and agriculture sectors. According to the industry association, ANFAVEA, truck and bus production this year is expected to grow by 42% on the prior year. The wind power sector also continues to enjoy a bright outlook. The latest data from Brazil's Mines and Energy Ministry shows that in July, the country set 10 new records for renewable energy generation, including from wind power. Today, wind power accounts for 10.9% of Brazil's energy profile and is expected to reach 13.6% by 2025, according to the ministry. Turning now to our special steel operations in the United States, the outlook for the market is positive, which have vehicle production this year projected to grow by 45% year over year, driven by economic growth and gradual improvement in the oil and gas industry, with so-called rig counts increasing by 75% in June compared to a year earlier. However, light vehicle production sales volume should continue to lag due to the semiconductor shortage. We estimate that around 1.5 million units will not be produced this year because of this shortage. Worldwide, auto assemblers project that they will produce over 64 million fewer units due to the lack of components. Moving on to the next slide, I want to reinforce that our Special Steels business division, which is a global leader in this market, remains focused on meeting our customers' needs with the best and most innovative solutions in products and services. As part of this strategy, we recently concluded at the Monroe Mill located in Michigan, an important investment to technologically modernize and update the plant, which will improve our performance in costs and in offering higher value products to the market. Meanwhile, in Brazil, we announced a few months ago investments of around $200 million to modernize and expand our special steel operations in the country, in line with our positive outlook for recovery in the automotive and machinery and equipment industries. A good part of this investment will be allocated to the Pindamonhangaba mill, where we are installing a new continuous casting machine slated for startup in August 2022. The equipment will enable Gerdau to achieve higher automation and improve yield, resulting in differentiated and even higher quality products for demanding markets. The technological revamping of the plant also is aligned with the growing use of clean steel, which offers low residuals and superior quality. The investment is aligned with the outlook for higher production of hybrid and electric vehicles. In Brazil, hybrid and electric vehicles should account for 9% and 3% of the light vehicle market by 2030, respectively, according to the consulting firm EHS Market. Thank you, and I will come back after Scardoelli's presentation.
What an incredible journey built by many generations and by great innovations. Thank you, Gustavo, for sharing this brilliant story about Gerdau. Well, now to continue and talk about the prospects for the Business Division North America and market indicators, I would like to invite the Operations CEO, Xie-Yuan Wang. Wang, welcome to our event.
Jiayuan Wang. Thanks, Gustavo, and good afternoon. Thank you all for taking the time to hear more about Gerdau Long Steel North America, we refer to as GLN. As an introduction for those who might not be familiar with our operation in North America, we produce only long steel products. We have leading positions in immersion and structural, and we continue to offer rebar as part of our product mix. We're 100% EF-based production. We have capacity of 5 million metric tons with a low carbon footprint using 100% recycled scrap. We have a network of processing and collection scrap facilities strategically located and capable of supplying greater than 45% of our internal requirements. North America is important to Gerdau as a strong operational cash contributor and a gateway to low cost of capital. The regional diversification strengthens Gerdau's global footprint. Now, shifting to our current view of GLN business, we are seeing strong end user demand for the foreseeable future in many metal consuming sectors. Our production backlog has been steady at over 3 months for multiple quarters. Order entry remain robust with all segments and channels to market that GLN serves. We're optimistic that there will be a meaningful US infrastructure investment package of at least 1.2 trillion that will continue to generate additional demand for steel impacting the future years to come. Over the last several years, GLN has been committed to expanding our product portfolio, enhancing our cost structure. This hard work and strategic vision have paid off during the tremendous demand recovery. Additionally, very recently, we have commissioned 2 major investments at our Petersburg, Virginia and Cartersville, Georgia mill, adding range and capacity in our piling, beams, and immersion products. Our Whitby, Ontario, Canada mill will have a new upgraded electric arc furnace in the next step of our roadmap journey, adding billet capacity to balance and optimize our 3 rolling mills in Ontario. I will share more detail on these investments in the upcoming slides. GLN is also committed to continue strengthening our relationship with our customer. As an example, the renewable energy sector is seeing an exponential growth, and GLN has been a strong partner to the main players of this sector. Gerdau's current asset capacity utilization is around 90%. Keep our mills full, we are seeing a large benefit to fixed cost dilution in our cost structure. Strategically using our network of mills, we can make the right product in the right places, easily shifting within our network to seamlessly service our customers. And then looking at our results this year, 2021 has been a year of many accomplishments in North America operation. And I give the team a tremendous amount of credit for the performance on top of the strong market. They are doing a fantastic job. And a big thank you to our customer and partners in the market. We have a robust goal to deliver double-digit EBITDA margin throughout the industrial cycle and operational cash flow, and we are pacing to achieve it. A big accomplishment we are proud of. Our average metal spread is at multiple year high, contributing to our strong EBITDA and EBITDA margin results. Next slide, please. Looking forward, we see a continuation of a positive business environment. Economic indicators are showing general optimism in the US. The US economy remains in a very strong growth mode with many sectors still within room to improve. For example, oil and gas, traditional non-residential spending, etc. We see metal spread remain at a level way above historical average for the foreseeable quarters. In regard to manufacturing, Institute of Supply Management, Manufacturing PMI, Purchasing Managers Index, measures new orders and production level in the US. It is a survey of major purchasing companies on the confidence of their future outlook, which has been and remained very positive. PMI showed a quick V recovery during the pandemic and has remained near decade high level since. We see continued growth in the quarters to come, but a slightly slower pace. On the non-residential construction demand and market, we also see reason for optimism as non-residential traditional spending begin to return post-pandemic. Now, the non-residential typical lag behind residential growth, and we certainly have seen that area grow for the last 18 months. Projection for builds in newly created suburban area of medical, school, and commercial building all looking strong. The Architectural Building Index, ABI, measures the level of activity by major architectural firms, the indication of future construction activity, generally 9 to 12-month leading indicator. Billings are growing and inquiry at record levels. ABI in June is at 10-year record high. This indicator is currently signaling strong demand in the future and suggests steady 2020 structural steel demand in the US before any impact of a meaningful infrastructure bill. Service center shipments remain at an excellent pace, and days on hand at distribution channel remain at multiple years lows. Both indicative of strong end user demand poll. Metal Service Center Institute, MSCI, an association serving the metal industry, reports carbon bar and structural bars days on hand inventory, both under traditional levels. Next slide, please. To provide first-class service to our customer, we need operational excellence. Our highest priority is always safety. The goal is zero accidents. We owe it to our workforce and anyone that will work alongside. To return safely home to their family each day, we continue to be recognized by our peers as the industry leader in safety, and this is something we are proud of. Now, I will talk about GLN's ambition. We have been on a journey for the last 3 years, and there are still a lot of good things to come. Our first pillar is culture. Cultural transformation is the foundation for current and future success. As we focus on training and developing our workforce, we have a flat organization driven by empowered teams striving for the same goal that is aligned with our strategic vision. To sustain this culture, it is important that continue to attract, retain, and challenge top diverse talents. We are building a winning achievement culture with a focus on what matters and results driven. We believe that to achieve challenging goals consistently, it is important to foster a culture where everyone has an owner's mentality and work relentlessly toward our strategic goals. Another key focus is our global Gerdau ESG initiative. GLN will be holding a solar groundbreaking ceremony on September 23rd of our 80 megawatts capacity solar project in Midlothian, Texas, as part of our ESG actions. Energy generation will represent around 20% of Midlothian's mill's consumption overall. We are committed to being great stewards towards educational, financial, and volunteer support to transform our people and our communities. The strategic align our capacity with our customer demand for products and service is key to the driving and the success of our second pillar, market positioning. We have built a company-wide obsession with the customer centricity, providing high-level service throughout fully leveraged digital applications to provide a seamless purchasing experience. We're expanding our product range, increasing highly productive service offerings to better serve customers. Understanding and winning the individual uniqueness and by creating a win-win solution to acquire and diversify market share today and for the future. The last pillar of our vision is asset strategy that will support our long-term plan. We will further improve our low-cost position and operation efficiency with a capital expenditure that will allow us to have high utilization of our major mills throughout cycle, building flexibility and improving the range of manufactured product in each mill will allow us to better serve our customer and optimize our network of mills to deliver higher profitability. A multifunctional team with strong technical and commercial skill is working to assess the best strategic economic project that will further improve our capacity and generate the best return to every dollar invested. This team is working in a series of alternatives of capital expenditure that will deploy as part of our long-term plan, in which we are not limiting ourselves to the mills. We believe there are great opportunities to improve our return upstream and downstream also. The project that were just commissioned in Petersburg, Virginia, and Cartersville, Georgia, were both on time and on budget, and the results of hard work of a lot of people. We've also approved an electric arc furnace modernization project for our mill located in Whitby, Ontario. There are some other projects in the pipeline, and we will share more information with the market when they are approved. Next slide, please. Now, I would like to share more detail of our recent capital investments. As mentioned earlier, we are committed to expanding our product portfolios to service customers better, improving operating efficiencies and lower cost. The modernization of Cartersville and Petersburg rolling mill are recent examples. Both mills' CapEx projects were commissioned early this year. For the Petersburg project, all new sites have been commissioned, and we are ramping up production through the balance of the year. The results will come in 2022. For Cartersville project, all new sites are currently being commissioned in Q3 of 2021, and the original product will be recommissioned using the new technology over the next year, improving overall productivity. The Whitby EAF upgrade will bring substantial gain to efficiency and productivity, reducing environmental impacts and improving its low-cost position while generating additional volume to serve the region market demand. This project is ongoing and will be completed in Q3 2022. Overall, these three capital investments total over $130 and align to GLN's execution of a long-term strategic plan, a roadmap that our team continue to refine and extend further into the future, finding solutions that will deliver long-term growth and sustainable enhanced financial returns to GLN. I'm excited to have this opportunity to share our GLN vision and future. Thank you, and now I pass it to Farah.
Thank you so much, Wang. A great presentation. And now to talk about the prospects for the Business Division Brazil and South America, I would like to call Marcos Faraco, Vice President of this operation. Faraco, you have our attention.
Well, good afternoon, everyone. Hope you are safe and doing well. My name is Marcos Faraco, and I'm responsible for our business here in Brazil, Argentina, and Uruguay. According to the Brazilian Steel Institute, the steel demand in Brazil should grow 25% this year. When we look at our shipments, when we look at our order entry, and when we look at our backlog, we see solid numbers and very healthy numbers. And we believe that we're going to meet the expectations for the years in terms of domestic deliveries. When it comes to asset utilization in Brazil, our number today is around 80%. And breaking down this number, what we see is for the heavy plate line is between 70 and 75. If you look at our downstream business, is around 85%. If you look at our long product business, around 80%. And if you look at our hot rolled coil, we are running full in our Stackle mill in Ouro Branco plant. I think that I would like to highlight one important point about our results in 2021 and the importance that we have from our business model. As we have mentioned before, the flexibility of our business model and the agility that we have in our culture is allowing us to capture most of the market opportunities that we have seen in the market throughout this year. This has been very instrumental to the results that we have delivered, and we believe that this is going to be very important for the next months and especially for 2022. Just going now into more details about the markets that we play, I'd like to talk about the construction market. As you know, construction accounts for average 40% of our deliveries here in Brazil. And what we have seen since last year is that demand is improving month after month since May last year. So we see very strong demand, very healthy levels of demand. And when we look at the different sectors that are part of this market, residential sector, which accounts for about 30% of the construction demand, we look at the numbers, construction sales going up by almost 25% compared to last year. When you look at inventories going down, and we look at new launches pipeline, 60% bigger than what we saw the same period last year. One number that I would like to highlight here is when we look at our construction sites that we serve and compare this last July to last year, we are serving 50% more construction sites than last year. So that shows the strength of the segment and the demand that's really coming from the construction sector. Important also to look at the retail portion of the business, which accounts for almost 50% of the construction demand. Gerdau is very well positioned to serve this segment, and we've been talking about this. And what we have seen is a very nice story. We expect these markets to continue to grow, and we should see numbers around 6% this year comparing to last year. And we also have infrastructure. Infrastructure accounts today for about 20% of the construction demand in Brazil. Important to say that about 10 years ago, this was 40%. So you see the potential that we have and the upside that we have in this sector. Yeah? But important to say that we see projects starting to move into infrastructure. We have wind farms, we have solar farms coming, transmission lines that are being installed in Brazil. You have urban mobility projects coming back. So you have transportation, new projects being announced for ports, airports. So we believe that infrastructure going to have some growth in this 2020 and 2021, sorry. And we expect the potential to be unlocked in the coming months and especially in 2022. So overall, when we look at the construction sector, we see a very strong demand, and our expectation for the balance of the year and for next year is very positive. Just moving now to the industrial market, which accounts for about 60% of our deliveries here in Brazil. It's a very important market, different sectors. I would like to highlight some important sectors that we supply to. Agriculture is a market that continues to grow, and everything that is related to agriculture is having a very good year in 2021. If you look at the agricultural equipment and machines growing by 25%, if you look at trailers going up by more than 45%, so this segment continues to demand, and the perspective for the coming future is very positive. Important also to highlight the yellow line segment growing more than 40% this year, which is very positive, and not only supplying for the domestic market, but also increasing the exports and serving North America and Europe on the construction sector. And another important market for us is the energy market. As I mentioned before, wind farms, solar farms, transmission lines, strong demands. We have a very healthy backlog for the sectors, and we continue to see a good perspective for this energy sector in the coming years. So if you put all this together, we believe that for the coming months, we're going to continue to see the solid demand coming from the different sectors on the industrial market. And our perspective and outlook for 2022 is very positive, where we see the momentum going forward, and we see this demand going forward for 2022 as well. Well, now talking about the strategy, 2021 has been a very important year for us in terms of strategy execution. We just announced some expansions in our production here in Brazil. We are increasing our hot rolled coil capacity by 30%, and that's going to be done in Ouro Branco site. We're also announcing that we have plans to invest to double our structural beam capacity. That's also going to be in our Ouro Branco site. And this year, we have the full integration of the former Silat, is what we call now the Calcaia mill, that is part of the business and has been very instrumental and fundamental to our strategy this year. It's helping us to serve the Northeast and the North regions of the country, and we have more than tripled the volume that was produced in that mill before our acquisition. I want to also to highlight as part of the strategy implementation what we call the Digital 4.0 package. We've been investing very heavily in Brazil in analytics, artificial intelligence, image, and we're starting to capture the results from these investments. When you look at our cost structure, and especially when you look at our operational efficiency, we see important results coming from these investments. We also have important investments that we are doing in the customer relationship. Gustavo is going to talk about this later, but we see a lot of improvements going on and progress in 2021 coming from this strategy to go digital. And the last piece of the strategy that I would like to highlight from 2021 is related to our commercial strategy. Comercial Gerdau, that's part of our business model in Brazil, is our distribution network, and it's helping us to reshape our go-to-market strategy here in Brazil. Just to give you some numbers, we have added more than 25,000 customers to our customer base in the last 3 years. This year, on average, we are adding 1,000 customers to our customer base. More important than the customer base is that we are also capturing this profit pool for the last mile. So we are capturing the margin from this last mile, and most important as well, we are not adding fixed cost, and we are doing that through a digital platform. So Comercial Gerdau, as I said, is reshaping the way that we go to the market, and is really helping us to get closer to customers and add value to our business. So this is our journey. This is going to continue towards 2022, but so far this has been a very good year in terms of strategy execution here in Brazil. And now shifting to our countries in South America, when you look at Peru, Argentina, and Uruguay, we have very good demand also in these countries. The expectation and the forecast for this year that we're going to grow between 20 and 30% our deliveries in these countries. And what is driving basically demand is agriculture, mining, and construction. And when we look for the months ahead, and when we look to 2022, we continue to see this demand very solid. So the perspectives are very positive for the coming months for these 3 regions that we have in South America. So that's what I had to share with you now. I come back later for the Q&A. Thank you very much.
Thank you very much, Faraco. It's always good to learn more about operations in Brazil and South America. I would like to remind you that our chat is available to you. So if you have any doubts about the topics discussed so far, just send us your questions. At the end of the program, as mentioned, we'll have some time saved to answer them. Now to talk about Gerdau Next's great development during this first year, I would like to call Juliano Prado.
Ladies and gentlemen, good morning and good afternoon as well for those in Brazil and Latin America. In addition to our goal of growing the steel business in the Americas, with a long-term vision, we invest in new business that complements steel. Gerdau Next comes to undertake beyond steel, diversifying our business portfolio. Working on sustainability, mobility, and adjacency in construction, we look for new opportunities that generate more value for our customers and greater competitiveness for Gerdau. Next slide, please. We seek to build a new portfolio of relevant and profitable companies connected to Gerdau Core within an ecosystem of valuable partnerships. In the construction area, we invested at the end of 2020 in Brasil Cubo, an off-site modular construction company that's growing exponentially, already above $100 million on sales this year, by the end of August, I would say. And we launched G2 Base, a company that makes construction foundations with metal piles. Still under construction, but more connected with neighborhood retail stores, we have a joint venture with Votorantim Cimentos and Tigre that already handles a marketplace of $1.4 billion annually. In sustainability, in addition to the solar park under development in Midlothian, US, we recently announced a joint venture with Shell to build a solar farm of 190 megawatts of power in Brazil. We expanded our path in sustainability with the launch of Gerdau Graphene, which will develop applications for this advanced material, graphene, in multiple sectors in Americas. There are also two circular economy initiatives, eCiclo and Recircula, which I might call at this moment developing digital MVPs related to recycling. The sustainability vertical tends to represent between 50 to 60% of Gerdau Next total value generation, mainly due to the high EBITDA margins. On the right side of the slide, we see G2L and GMOV, our combined logistic business with Logitech, with a total revenue of $150 million expected for the end of this year. It's important to mention that all new businesses are born with the digital complement, because there is no such separation as they work together as an integrated solution. Next slide, please. We have to constantly look for synergies, maximizing revenues and integrated margin. In the example presented here, we have a pulp warehouse under construction in the north of Brazil, Itaqui Port, using Gerdau steel from Ouro Branco mill, transported by G2L, our logistic company, with the foundation, the base, built by G2Base, over 3,000 piles, and the metallic construction above the ground by Brasil ao Cubo. Another example that I can tell you, through Brasil ao Cubo, we built an 8-story building in just 100 days, 20 days of assembly, full metallic construction, and I would say more competitive, not only in cost, but mainly in delivery time, which is crucial for our customers. The key message here is that we have created a very competitive solution with all the companies attached. Next slide, please. Thank you very much. My last slide is about our B2B2C joint venture with Votorantim Cimentos and Tigre. Juntos Somos Mais started as a B2B marketplace connecting building material stores and neighborhood stores with seller companies engaged in a loyalty system. We will end 2021 with more than 100,000 stores integrated into the program. As with any marketplace, Juntos Somos Mais matches buyers with sellers. All the stores have different benefits and prices when buying building materials from Juntos Somos Mais, but not only products from the 3 shareholders, but also considering more than 30 selling companies. As you can see here, in 2020, this marketplace transacted more than $1.4 billion. We are already the top Brazilian player in the virtual construction arena, and to keep winning, we are now implementing the B2C strategy with the recent acquisition of the digital companies, Trader and Habitíssimo Brasil. When final customers want to carry out a construction or minor renovation, they can use our digital channels to have access to qualified and audited professionals with more affordable costs, and these professionals buy products from own stores on Juntos Somos Mais. A successful closed circle connecting B2B and B2C. Thank you very much. It was a great pleasure to be here.
Thank you, Juliano. It's great to know more about Gerdau Next and the steel value chain complementarity. Now to talk more about EBITDA and margin development, free cash flow and working capital, indebtedness, shareholder return, and capital allocation, I'm pleased to call the CFO at Gerdau, Harley Scardoelli. Welcome, Harley.
Good morning, good afternoon, everybody. It's a pleasure to be here in the year that we complete 120 years as a company, as was mentioned before by my colleagues. It's an honor to be here and be able to, even it being online, talking to you and talk about our financials, our numbers. So without further ado, start covering my numbers. First of all, our EBITDA. As you have seen by the numbers that we have released for this year, we have an all-time record for our EBITDA. We've made in the first 6 months of 2021, 10.2 billion reais of EBITDA. And as you can see in the graph, where we see the numbers since 2012, this is almost double in 6 months what we had in most of the past few years. So it's a really very good results, not only in terms of absolute terms, but also in terms of EBITDA margins. As you can see, this is the blue line that we see in the graph. We went from being around 11, 12% EBITDA margins all the way up to almost 30%, in this first 6 months of the year. And this is a combination of factors that justify these great numbers. First of all, of course, the markets are in high demand for the steel products, commodities in general, right? But steel products are also very highly demanded. We have also seen some structural changes in our markets, especially coming from the reduction in production out of China. As you guys know, have been following our markets for the last few years, China was at a point of time exporting, more than 100 million tons of steel a year. And they have reduced substantially these exports. They're trying to reduce their carbon emissions. They're trying to become more efficient in their production. And this has, of course, helped a lot, especially in terms of prices. So this is a big factor that has helped our markets as well. The second, of course, and not less important, is a management focus on cost, productivity. We have also reduced SG&A significantly in the last few years, almost $1 billion reais of reduction in the last few years. And this is here to stay. This is a change that we did in our structures. We became leaner, we became more efficient, and this is something that we will carry on from here on. So record EBITDA numbers for this year. Secondly, we're looking into our free cash flow and our working capital. On the top of the page here, you see our free cash flow in million reais. And by the way, I'm looking in numbers here always in reais, because this is the numbers that we put out to the markets when we do our quarterly releases. So 2020, more than 4 billion reais, same thing for 2019. For this year, the first 6 months, 2.3 billion reais. So very strong cash flows remain being our delivery in terms of cash generation, very importantly. And below we see our working capital. And this is an important point to make here. The line that we see there, in the middle of the bars, those are the working capital in terms of days of cycle. Okay, so you see that from 2012 all the way to here, we reduced from about 97 days all the way down to 50, 60 days. Okay, we ended 2020 with 49 days of cycle. This is very low. Okay, and this is natural because as you know, by the end of last year, markets were highly demanded and there was a lot of difficulty in the whole chain, okay, to replenish their inventories. So we were, of course, prioritizing delivering products to our customers, and we're not able to do at the same time a rebuild of our working capital. Okay, so what we're doing now during the first half of 2021 is that we did both. We delivered products to our customers, but we were also able to bring back production in some of our facilities, okay, and bring inventories to a better level. Okay, and why this is important? Because we entered the second half of 2021 with very good perspectives for EBITDA, and at the same time with more normalized levels of inventory, which means that our free cash flow should be even better for the second half because we have already rebuilt our working capital. This is a very important point that I want to make. Going now to my third slide here, we talk about debt, liquidity and indebtedness. This is also a number that we're very proud of because if you look there in 2015, that was the point in time where we had the highest leverage in our history, above 4 times net debt to EBITDA. Okay, so this was of course a situation that had many factors there. Okay, we are in a cyclical business, of course, and by being cyclical, whenever your EBITDA goes down, leverage naturally goes up, right? The other point is we have traditionally always been able to tap into debts in the international markets. Okay, what's the advantage of that? Long term for our debt, and we'll talk about that in a minute here, and long term, and at the same time, we can also have very low interest rates. Okay, but the reverse of that coin is that normally it's debt issued in dollars, right? So whenever you have depreciation of the real, you'll see a spike in leverage. This is past us. Okay, if you look at the numbers for leverage now, we ended the second quarter, end of June, with leverage at 0.65. Okay, so these levels are very, very, very adequate. I know that we have published that our target established by the board in terms of financial policy is to get to 1 to 1.5 times. But the point is, we established that target as a maximum, right? We crossed that line, and we're on the positive side of that line, right? So leverage is very much under control. Okay, this is the lowest ratio in 14 years that we achieved. Okay, we remain investment grade by the two of the rating agencies. In reality, by the three of the rating agencies right now, and we are very happy with this position. In the bottom there, you see the profile of our debt. Okay, on average, our debt costs 5.36% a year, and the average maturity in terms of term of payments, right? How much time I have to pay my debt is 7.7 years. So it's a very good profile. You can see also we don't have any single year where we have a big spike in terms of payments of debt. So it's very well established. We also are very happy with that. The point about that is that there's still one target that we want to achieve, which is to take our gross debt. Today it's about 16 billion reais. We want to take it to 12 billion reais of gross debt. Okay, so this is also one of the financial targets that we have that we're really striving to get to. And with the cash flows very strong as we are, I think we're going to get there very soon. Going now to return on investment. Okay, this is a very important point, and probably we consider this to be the most relevant point for investors, because this is how much return you get on the assets that you have invested on. Okay, we're talking about fixed assets, we're talking about inventories, we're talking about goodwill that you have. Okay, so you get your results and you divide by those assets and you see how much return you're giving. And then you compare it to your cost of capital, because that's the other side of the equation. You have to have your return above your cost of capital. That's when you're really creating value for your shareholders, you're paying your debts, so you're really doing your job in terms of the financial targets of the company. As you can see, our returns went to almost 10% back in 2018, went down slightly to 7% in 2019. At 2020, we reached 8.7, which is right about our cost of capital. So we're basically delivering cost of capital in 2020. In 2021, for the last 12 months, if you take the first 6 months of 2021 and the last 6 months of 2020, we're returning 22.5%. This is practically double our cost of capital. Okay, so this is how you create value, especially for your shareholders. And this is return to shareholders measured as our dividend payout. Okay, so that's basically our dividend payout policy, how much you're paying in terms of dividends, right? So if you look for the last 12 months, we have paid 7.8 in terms of we achieved in terms of net income, and we paid 2.3 billion reais in terms of dividends. Okay, if you look at the dividends paid in the last few years, okay, so this number is between 3 to 5 times what we've paid in the last few years. And this is important to mention because our dividend policy is a percentage of our net income. So it self-adjusts to better results. And this is important when I talk a little bit about capital allocation, okay, in a couple of slides down the road here, okay. Dividend yield, that's at the bottom of the presentation here. Same measurement in the last 12 months, we have achieved 8.5% dividend yield, okay, which is really very, very strong. If you look at the last few years, we have always been positive. We have always paid dividends, year in, year out, but dividend, yield has increased significantly, as you can see here. Now talking a little bit about CapEx, there's a lot of information here in this graph, and you're going to have access to this, of course. I'm not going to cover every single number that we have here, but important to mention is that we are investing in additional capacity in our Brazilian operation, in our North American operation. We're investing in improvements of our portfolio in our specialty steel division, okay? And we have, I mentioned already about the return on capital employed. All of this translates into putting money in your assets, keeping them productive, effective, adding capacity, and at the same time, achieving a good return on capital employed, okay? This is, as I mentioned before, a very important measure. Right? In terms of expenditures, you can see that from 2019, 2021, we went from spending 1.7 billion reais in 2019, all the way down to 1.7, less than 1.7 in 2020, and that was of course because of the pandemic. We had to reduce a little bit in the beginning because there was no clarity of how things are gonna happen during the year, right? And capex plans are things that it takes time to to stop, but takes time to resume again, right? So that's why for 2021 we're spending 3.5 billion reais. This is the plan for the full year. Okay, we've spent about around 1 billion reais so far this year, but the plan is to spend above 3 billion reais this year. This is spread between technological improvements, in terms maintenance of our equipment, additional capacity as well. Okay. Now going to the capital allocation slide. Okay, this is a conceptual slide, and what we want to address with this slide here, basically, it's telling you that with the strong free cash flow generation that we're having this year, we've been able to basically accommodate all the main requirements for a company. First of all, our shareholders, our dividend. I mentioned before, 2.3 billion reais for the last 12 months, 8.5% dividend yield. So we're being able to really return a lot of capital to our shareholders via dividends. So this is one point. At the same time, we're able to execute our capex plan. We saw before 2.5 billion reais for the year, so very strong capex. This is the investments that are going to assure that we keep having good EBITDA in the next few years, that we invest in the right businesses. We have Gerdau next. We have investments in North America, in Brazil, our main markets. Other operations, of course, are going to get their share of capex. So that's how you assure that you keep generating good results for our shareholders. You need to invest in capex. And thirdly, we were able also to rebuild our working capital. You guys will remember, and we're still seeing a lot of disruption in supply chains all over the world, especially when you talk about commodities, right? So we were able to supply the demand and at the same time rebuild the inventory. That's very important because if you don't rebuild the inventory, the whole chain suffers, and your customers are not able to adequately supply their customers, right? So I think that we have successfully allocated capital in a way that addresses all these main points, okay? And last but not least, I mentioned before as well, we have the target to reduce gross debt. It's a cyclical business. The important thing about keeping leverage under control is that you reduce your gross debt, because net debt is a function of cash versus debt, right? So cash, all of a sudden, you may have other requirements, but your gross debt remains there. So we're also working besides those points that I mentioned in reducing our gross debt, very important. Again, target is to get to 12 billion reais, okay, maximum gross debt for the company. And this is my presentation. I thank you all for your attention. Now we're going back to Gustavo, and we'll be able to join all my other colleagues here during the Q&A session. Thank you very much.
Thank you very much, Scardoelli, for presenting the historical financial results. Well, now President Gustavo Werneck will return to talk about ESG strategy, governance, diversity, environment, and results in the social sphere. At the end, we'll open the Q&A session, so if you haven't sent your questions yet, you can still send them during Gustavo's presentation. Gustavo, our attention is all yours.
I return for this last part of the presentation to give more details on Gerdau's future. I want to go over the factors that form the solid foundation that has paved the way of our transformation aligned with the new future that we are building. We are benefiting from our business model based on diversifying our geographies and our production routes, which included iron ore, scrap, and charcoal, a bioreducer, as well as our focus on operational excellence. But you also are harvesting the fruits of the cultural and digital transformation that we have been undergoing over recent years, which has made us a lighter, simpler, and more agile company ready to meet the needs of our customers. With the simplification of our company, we are now focusing solely on the Americas with the conclusion of our divestment plan that generated proceeds of $1.5 billion. In addition, our selling, general, and administrative expenses as a ratio of net revenue fell to under 3%, down from 6% 5 years ago, which represents annual savings of around $300 million. Looking to the future, our digital vision, whose guiding principles include creating more value for customers and improving the performance of the key internal processes, such as industrial and supply chain, have delivered real gains of nearly $200 million since 2018. Our long-term vision also led us to announce the creation of Gerdau Next, our new business division, which was covered by Juliano. And we remain focused on becoming a more sustainable company by engaging our people and value chains in the challenges facing our planet. The next slide gives more details on our digital transformation. A good example of this effort is the number of new customers and businesses captured via digital channels, with over 9,000 customers buying steel online during the last year, while another $30 million from new digital revenue streams contributed to our EBITDA for 2021. And this trend should continue to accelerate in our countries where we have operations. Let's go to the next slide, where I will comment on the risks to our business that we see in a future scenario. We are closely monitoring the emergence and impacts of the new COVID-19 variants and the effects they could pose to people and the economic activity, despite the advance in vaccinations around the world. In the near term, we are closely monitoring developments in the run-up to Brazil's presidential elections in October 2022. Since the economic scenario typically reflects the related political uncertainties, as well as the effects from inflation on consumers' purchasing power in the economies where we are present. We also expect the shortage of semiconductors in the global market to continue, which should adversely affect the automotive industry and consequently the supply of special steels for the production of light vehicles. In the medium term, we are following developments in the supply-demand balance for steel, especially in Brazil and the United States, with the possibility of new production capacities coming online in both countries and then associated changes in important flows. We also are closely following the increase in demand for ferrous scrap in our markets, which could pose challenges to securing access to the material and pressuring our margins. I also should note the uncertainties and challenges associated with the political scenario in Latin America, which in the medium term could have impacts on the conduction of the economy policy in these countries. Now, on slide 33, you can see our ESG journey. A highlight was the approval for the proposal to include performance targets for ESG indicators in the long-term incentive plans of our senior executives. Coming into effect as of 2021, the change stipulates that around 20% of the amount of the long-term bonus included in the variable compensation of our executives is conditioned upon meeting ESG targets. We believe that this will give greater strategic visibility to our organization's sustainability, a topic that will help carry us into the future. The measurement of this percentage of ESG targets will be calculated based on two new indicators: percentage of women in leadership positions and greenhouse gases emissions. Another target will be the achieving 40% of economic value added, the EVA. Our ESG priorities also include fostering diversity and inclusion, mapping all risks involving the business, and Gerdau Next's focus on solutions to improve sustainability. Going to the next slide, you can see that last year our carbon emissions were half the average of the global steel industry. This performance reflects our management focused on seeking solutions to global challenges, such as climate change, as well as a production model based on ferrous scrap as the main raw material and the use of charcoal produced from planted forests. Today, Gerdau is Latin America's largest recycler, with 11 million tons of scrap processed annually. Meanwhile, the planted forest base that we use to produce charcoal covers an area greater than New York City. Gerdau also adopted the curve methodology, marginal abatement cost curve, and marginal energy abatement cost curve for structuring its emissions reduction targets for the short, medium, and long term. The goal of the study is to learn about the technologies available and under development that are pertinent to and feasible for the steelmaking process used by the company, analyze which are eligible, prioritize and plan the initiatives and investments that then disclose them to the external public over the coming years. Returning to the topic of diversity and inclusion, on the next slide, you can see that in 2018, 17% of leadership positions at our operations in Brazil were filled by women. Now, in 2021, we have increased this percentage to 23% through the various initiatives to foster gender equality that we have carried out in our operations to ensure equal opportunities for all persons. The goal is to reach 30% by 2025. We still have a long way to go, especially with regard to senior leaders, but we believe that inclusion is a journey and that, step by step, we will achieve a more diverse and inclusive workplace. Supported by our ongoing cultural transformation, we continue to make progress in incorporating the ESG agenda into our business decisions with a view to making the company even more sustainable than it has been over its 120 years completed this year. One important advance in this process is the ESG scorecard matrix, which improves visibility of the environmental, social, and governance indicators prioritized by the company. The incorporation of these indicators in the long-term compensation of our executives was part of the process to increase the transparency of Gerdau's reporting of ESG information to the market and to the general public, upholding the commitments to transparency and sustainability incorporated in our decision-making process in our ESG action plan. Thank you very much, and we now move to the question and answer section.
Thank you, Gustavo. Despite the atypical period we are experiencing, Gerdau has continued to show great results. Congratulations to everyone for the excellent and enlightening presentations. Before we start the last part of our event, with questions from analysts and investors, I would like to present a short and inspiring video about Gerdau's 120 years. Next, Rodrigo Maia, Investor Relations General Manager, will be here in the studio to lead the Q&A session, okay? Well, let's play the video, please.
Over the course of time, we grow and spread. Like a deep-rooted tree, we become intertwined with the world around us, in the houses where people live, in the places where they work, learn, coexist, and enjoy life, in the vehicles they drive, in the bridges that connect communities, in the industries that move the world. You may not notice us, but we're all around you. For 120 years, we have been invisible protagonists, so that everything essential to life becomes visible. After all, it's not about steel. It's about welcoming, growing, moving, and coming together. It's about accomplishing. Our roots, strong and deep, are just the foundation of a tree whose greatest strength is the fruit it yields. In these 120 years, we have flourished. We have been inspired by life, the human imagination, and the future. Our roots have extended beyond us, transforming into a rich and diverse ecosystem with our customers, employees, and communities. Celebrating these 120 years means recognizing both the history of these roots and their ability to support a future that is evolving. The future is being constantly shaped, and now more than ever, we must be protagonists in its development. Let's connect knowledge. Let's invite everyone, through the strength of our purpose, to build solutions that shape the future so life can prosper. We celebrate 120 years of Gerdau, mixing our colors as a symbol of our unconditional commitment to future generations, to sustainability, and above all, to the development of solutions for the world's changing needs.